Thank you for your interest in the Determinator, a Rose Financial broker pricing and compliance tool designed specifically for the mortgage broker, not for the general public. When you are pre-qualifying your borrowers and you find they do not fit into a Fannie, Freddie, or FHA product, this tool will be very helpful to you. It will allow you to price your non-prime loan and give your client a reliable rate, point and fee, and APR breakdown.
All right, the Determinator has a couple of things that need to be pointed out. First of all, there's one for a first mortgage, and there's another for a second mortgage. The one we have in front of us is for first mortgages only. Also, this is only for the owner-occupied loan. The Determinator is not set up to price non-owner-occupied transactions or 5+ residential units or mixed-use properties or commercial properties. Really the owner-occupied borrower in first or second. In our example here, we're going to be working on a first mortgage. Also, I want to point out that the Determinator has 3 tabs. This tab we're on now is called the Loan tab. There's a GFE tab and a QC tab. These tabs are auto-populating. Once values are put inside the cells here, and in particular the cells that have the red outlines, the information here is self-populating. It'll set up by itself. So let's get started. For this transaction or example, we're going to use a submission date of today, the date of this video, 3/29/14. I'm only going to put in the required values. We have a FICO score of 579. Zip code for the subject property is 92867. The number of borrowers based on the application that we've taken from our client is 2. And the number of dependents, they got 2 kids who live at home under the age of 18. Property value is $600,000. The borrower wants a loan amount of $380,000. And notice right away it produces an interest rate value and still does not give you some of the results. That's because these cells are still incomplete. We're going to finish by putting his monthly income in, and we're going to put in his proposed monthly payments. He has no second mortgage. His property taxes are $380 per month. Homeowner's insurance, $75 a month. He has no HOA. And we know of no other debts that need to be shown here. We're also going to, having looked at his credit report, aggregate all of his revolving debt and put it here. He has, let's say, $10,000 in debt with a combined payment of $150 per month. And we're going to assume the borrower wants to pay all of that off. So our payoff is $10,000 and the remaining payment is 0. He has an auto loan, for our example, of $18,000. That's a $240 a month payment. He wants to pay off 0, so he'll have a remaining payment of $240. If he had IRS liens, franchise tax board liens, judgments, wage garnishments, or something like that, personal debts, we would put that here. This borrower has none of those. So a couple of things to recognize right away is that we've got a value. The Determinator says, based on the information we have, it's a pass. And it tells us what our maximum loan to value is. It also tells us the consumer debts before here and after. Those are the values that come from the information we just filled in. When you go to the next tab, you'll see that the lender and broker fees are already filled in, as well as the basic third-party fees. The lender and broker fees shown here represent the maximum allowable fees without crossing the Section 32 fee and APR thresholds. The payoffs that you just showed on the loan tab as needing to be paid will be itemized here. If we're paying off another mortgage, or if we're paying off another lien or something else, we can just write that in here. Pay off first mortgage, $300,000, and we can fill that in. We can also estimate the date we think the loan will close. So we're going to say 4/15/14, and it will automatically put in the prepaid interest dates and the value right here. This is the maximum broker fee allowable based on the requested loan amount. Broker points will increase or decrease based on the loan amount and the loan position. A mortgage broker, however, can change that to 0.015 or 0.01, and you can lower your fee, and you'll see that the $3,800, when we change it 0.015, it automatically changes the values here. One thing it will let you do is to lower the value, but it will not allow you to increase it. If I go to 2.5, it'll say incorrect value, and it'll tell you why. It'll also say the maximum fee allowable is always going to be shown here. I'm going to retry and say, let's stick at 2 points. In this example, we'll assume the borrower wants a lower interest rate. In order to lower the rate, we will exercise the rate buy-down option here. The fee is 40 basis points per 1/4% reduction in the interest rate. You'll see the interest rate is now 9.95%. Now, going back to the loan tab, for the buy-down, you can see that the buy-down rate is shown here. Borrowers with better FICO scores, if he has a 580 score, he'll get a 50 basis points reduction to the rate, or 620, he'll get a 3/4 rate drop, or 680, he'll get a 1% drop on the rate. Please note that 70% LTV for first mortgages is only available in certain areas. You can see here there's a FICO, a buy down, and an LTV. So let's say the borrower's property was really worth $1.2 million. You can see that the LTV reduction would kick in. Having done that, we're going to replace our value with $600,000, and we're going to watch the change to the interest rate. This interest rate is going to change based on several factors, including the loan amount, the FICO score, and the term of the loan. Also notice we have a pass, meaning the loan has passed the legal and product compliance tests. I can actually make a note here, 329.14, pass, loan is pre-qualified. Rose Financial will use these values. We will give you a loan of 8.95% and go to the good faith estimate. The lender fee is 1 point. We will charge you a maximum 1 point, and we will honor all of these fees as far as the lender fees and finance charges are concerned. Third-party fees could vary, but this will at least give you a reliable model to create your own disclosure package, including good faith estimate, the truth in lending statement, and the other disclosures that your borrower is going to require. These amounts shown here under the truth in lending calculation are valid, and you can use them and rely upon them. Rose Financial will honor them. The last tab is the QC tab, and this tab really is showing you the results of all of the tests that have been performed on your loan. It's going to tell you whether or not you're a Section 32 loan. For the state test, the values are shown here. The QC product test for Rose Financial are shown here, and the qualified mortgage test values are shown here. The primary test that we're doing here is the Section 32 high-cost mortgage here on top. This value will always be a pass because we're producing the maximum values possible without crossing into Section 32. That's what this tool is designed to do. So now you can see what the tool does. You can see that we have the loan tab, the good faith estimate tab, and the QC tab. Now in some cases you're going to produce these values and you're going to get a fail result. Let's change the fair market value here from 600 to 575, and let's change the FICO score back to 575. The Determinator is going to give you a value of a fail because the loan to value is 66% and the maximum allowed is 65%. I'm going to make a note here, 329.14 failed, but I disagree. Please remember the Determinator is a pre-qual tool only for rate, pricing, and compliance. It is not an approval. If you disagree with the Determinator, please call us. We'll take a second look and hopefully give you an exception. We are interested in approving your loan. We are not in the business of turning loans down. Anyway, thank you very much for looking at the Determinator. If you have other questions about it, you can read information on these red flags, and you can mess around with it, change its values, but if it does give you a result, just know Rose Financial will honor it, and we will approve and close your loan. The exact same terms that are produced here. Thank you very much.